right. Well, welcome everyone to today's webinar. Just a few things before we get started. We're going to go ahead and record the session. So this will be available on YouTube after the webinar today, so you can rewatch or share with your friends. And then the other thing is that I'm going to go ahead and enable closed captions. So that'll be starting shortly. All right. So before we dive in, we want to just take care of a few housekeeping items to make sure that everyone is using Zoom properly. Whoops. So you'll see here that there are a few different places to find your audio controls, your viewing controls, and communications controls. So if you're using a phone or a tablet, your audio controls are up top and your communication controls are at the bottom. So today's webinar, you won't be able to chat to us or you won't be visible. So let me just, there we go. So, so if you do have a question, we will have the Q&A portion enabled. So you can see that button at the bottom of your screen. So if you have a question, go ahead and type in your question and then I'll be fielding those. So they might be asked during the presentation, but we'll also have a Q&A portion at the end. All right. So that being said, we'll go ahead and dive into the webinar. Oops. One moment. I'm so sorry. One second. All right. So welcome again to Preparing to Buy a Home in the Current Market. So I'm going to go ahead and hand it over to our AVP of Real Estate Sales, Jeff Hudson.
Thanks, Tatiana, and good evening, everyone. We're really thrilled that you could join us this evening. My job here is just to kind of introduce San Francisco Firefighter Credit Union and then turn it over to the experts who are hopefully going to be able to provide you with some really useful information this evening. A little bit about San Francisco Fire Credit Union. We were founded in 1951 by firefighters for firefighters. However, the credit union has grown over the years. And now we're focused on not only the needs of firefighters, but that of the entire community. We also know that there's a lot of home lenders out there. And if you're just getting started in the home loan process, it can sometimes be really bewildering how to understand the difference from one lender to another, other than who's offering the lowest interest rate. So it might be helpful to know that San Francisco Fire Credit Union is local. The entire team that works on your loan is local. And that means that we really understand some of the unique aspects associated with owning a home in the Bay Area. And our goal for the evening here is to inform you of some of the key elements that are going to be helpful in both purchasing and financing a home and to prepare you as much as possible for the home buying process. And with that, I'm going to step back and I'm going to turn it over to our host for the evening, Rashida Rencher. Rashida, you're on mute.
Thank you so much for joining us tonight in our home buying seminar. Love to see everyone here. I am born and raised in the Bay Area, specifically Oakland. I have been in lending for the last 12 years, and it's a passion of mine. I really look forward to being able to give you the tools to be successful in your home buying process. I've loved working for credit unions. I've worked for a number of different institutions, but the credit union has kind of just a special place in my heart. I love being able to build the community and relationships over the last, I've actually been at the credit union for the last 8 years, and it's just been a wonderful opportunity. And I love working here. I love being able to help you and guide you through this process. So I hope that we're able to give you some tools in the next hour.
All right, thanks, Rashida and Jeff. And just to go over a little bit about what we're going to learn today, we have the agenda here. But before I go over the agenda, we do have a guest on the call with us today, a local realtor, Aaron. So you'll hear more about him later. But what we're going to learn today is how to get ready to buy a home, working with a mortgage lender, meeting your real estate agent. So you'll meet Aaron, finding your home and closing, what available resources we have, and a Q&A session. And then of course, we're going to get into, is right now a good time to buy? So before we dive into the slides, we want to learn a little bit about you all. So we have a trivia question, and we want to know from you guys, what would you estimate the average home loan rate has been over the past 30 years? So I'm going to go ahead and launch this question. So feel free to input your best guess, and then we'll share what the answer is. Okay, I'll give you guys a few more seconds. All right, so we'll go ahead and end the poll and share the results. So it looks like the majority of you answered 5.5% and 7.75%. So the correct answer is actually 7.75%. And I just wanted to share that, again, this is the average in the last 30 years. So the all-time high was actually in October of 1981. The 30-year rate was 18.63%. So quite high. And Rashida, did you want to share a little bit about the 30-year rate?
Yeah, so the average 30-year rate was actually, what was it, 7.72?
7.75, yeah.
7.5. So I think that's a really interesting statistic, just because we've historically, in the last couple of years, it's been much lower than that. So when we're seeing rates in the mid sixes and low sevens, we're thinking that these are really, really high interest rates, when in fact, these are still kind of low in the sense of, in the grand scheme of things. So what I would say is a popular saying right now is, marry the house and date the interest rate. So basically what that means is, if you're able to buy the house, you should buy the house and refinance when the interest rates come down. These interest rates are, they're volatile right now, but things are changing, and we do see some light on the horizon. So if you're able to, I say, let's go for it.
That's great, thank you. So on that note, I guess we can dive into a little bit about mortgage lending, since that's your expertise. So can you tell us a little bit about what some of the keys to mortgage lending are, and maybe help us understand what's needed to get started?
Absolutely. Purchasing a home is really one of the biggest and most important investments you'll make. So choosing the right experienced team to help you guide you through this process is important to ensure a smooth transaction. So, finding a realtor like Aaron that's local, finding your local credit union representative like me, this is a really, really good place to start, so you can get an idea of how things work and get the answers to all of your questions. The three components that we really hone in on lending is income, credit, and assets. So for your income, we're going to really take a deep dive. So if you're a W-2 earner, we're going to be collecting your W-2s for the last 2 years and your pay stubs, and we're going to be looking at your gross income. This is before taxes. If you're self-employed, we're going to collect 2 years of your tax returns of your self-employment, whether it's your personal tax returns or your business tax returns. And even if you're retired, we'll collect your retirement income with your 1099. So this is really the guts of your income. We'll take a deep dive into it and see what's gonna work best for you. And then in terms of credit, we really look at, there are 3 main components for your credit score. We're looking at your payment history. That's 35% of your credit score. Your monthly debt is 30% of your credit score, and the length of history of that you've had these lines of credit, that's 15% of your credit score. So, you know, having a really strong payment history, keeping your debt low, it's usually around 30% of your available credit, and making sure you have these lines of credit for a long time really help boost your credit score. So those are really things to keep in mind when we're talking about all of these things, right? And then the last thing that we look at is your assets. So where is your money? Is it in retirement? Is it in savings? Is it in stocks? Is it in RSU? Is it a gift? So we're going to look and dive into all of the available assets that you have to put towards the down payment.
Great. Can you quickly share what an RSU is?
Yes, so that's restricted stock income. So basically, it's like some of these tech companies will have, basically you have stock in the company. So they're giving it to you as income, but it's like basically they're giving you a piece of the company. And so we'll take a look to see if that's something that we can even access.
Perfect. Okay, great. Well, it sounds like, this is kind of the discovery process. So, someone would likely come to you, and maybe they don't have to have everything together. Maybe they could just come to you and, kind of get advice on how to paint the best or, be prepared for, home loan financing. That's great.
Exactly.
Yep. Awesome. Well, moving forward, so this is exactly what I was just referring to, I think. So, it sounds like you help, first-time home buyers get a good financial bird's eye view of what's going on. So can you tell us a little bit about, diving deeper, what specifically you look at beyond those three key components?
Absolutely. I take a unique approach. I like to really just sit and learn each of my members and each of everybody's particular situation. Everybody's different, right? Everybody has different needs. And so I like to really sit and say, I kind of like to work backwards. What is a comfortable payment for you? And let's work back to see what that purchase price would be. I like to do that just because, we go off of your gross income, but you don't actually receive your gross income. So you have a different idea of what is comfortable than I do, because, on paper, you're making, this gross income, but in reality, you have expenses, you have your way of living that you want to maintain. You have things that you are not showing up on your credit report that you want to keep, you want to keep you want to keep doing. So I like to kind of work backwards and see what's really comfortable, without having to pinch too much, but also, also saying, okay, you might be able to afford a little bit more if you cut back in these other places. So I like to kind of just customize what this looks like for each individual.
Perfect. And then we see, of course, credit again. Credit is very important in this process.
Credit is important because, with good credit, you get benefits, right? So you'll have lower interest rates if you can show that you have the ability to pay on time. It will be less expensive if you have better credit. That's not to say that it's not available for you if you don't have excellent credit, and we'll definitely put everything out there for you and let you know what the options are. Either we're going to build your credit so that you can get those best options, or you can just work with what we have. We have a variety of different products that work for a variety of different people.
Awesome. That's great. All right. So, important steps to buying your first home. Can you tell us a little bit? I guess we're getting more and more detailed here, but a little bit about maybe down payments, closing costs, other expenses that people should be thinking about when they're thinking about their budget.
So, really, we really want to make sure that you're saving. We want to see that you're able to save and maintain whatever expenses you currently have, so that when you're hit with the payment shock of a mortgage, you'll be able to do that. We do have a variety of different options. We do have, as little as 3% down for, and as low credit score as 620 for conforming owner occupied. And then it goes up from there, kind of depending on what you're looking for and what you're trying to do, whether it's an owner occupied versus an investment versus a single family versus a multi-unit. So there's definitely, a variety of different products that we offer, and a variety of different down payment requirements.
Terrific. That's great. Can you talk a little bit about what to expect for closing costs? Because I think sometimes that could be a surprise for some people.
Yeah.
So,
No, that's a great question. You should expect anywhere between 2 to 6% of the purchase price. And majority of those closing costs are going to be title and escrow. It's going to be inspection, which, Aaron will hit on later. There will be, there's regular closing costs for the credit union, but that's not a big part of the closing costs. But it's important to have that cushion, just so that you're not trying to, take everything that you have for just the down payment. There's going to be other things that come into buying the property.
absolutely. Great. Yeah, so down payment. So that's a chunk of change. So where does that typically come from for most buyers?
So for most buyers, that's going to come from savings. There's also, most employers allow for you to take out a certain percentage for a down payment. So that's an option. There's also, stocks and bonds. There's also people who are able to get gifts from family members. So it can come from a variety of different places. We'll have to take a look to see what your particular situation is and what will work best for you. And, we can piece together some of these. They don't have to come all from one place. They can be some of your funds. They can be some of gift. You can borrow from a 401k. We'll make it happen. We'll take a look to see what's going to be the best for you.
All right. Yeah, so I think you covered most of this earlier, but just to kind of echo or revisit what you stated earlier, some of the biggest impacts are around payment history. Is that correct?
Yes.
Yep.
So my recommendation would be to, put auto pay on everything, even if, that's just the minimum, and then you're able to kind of put more towards those higher interest rate credit cards to pay those down. It is really important that we see that you're making your payments on time. That's going to help boost your credit, and it's also going to help give you the best interest rates that the credit union has to offer.
Perfect.
And the
right.
credit usage also, so when you get a credit card, let's just say it's 10,000. You don't want to just put 10,000 of debt on there. You want to keep it around 30% of what the available balance limit is on any of those cards. That's really what triggers, any negative, or like it'll hit your credit if you have too much debt on each card. So really you want to try to keep that to a minimum.
Mhm. And then if I pay down my credit card and it's my longest, that's the card that I've had the longest, should I close it?
No, keep it open. It's just available for you. We want to see that that's available, but that it's not in use. I know it sounds kind of silly, but
Put it in the freezer. Just
yeah,
freeze it in a bowl. I'm
exactly.
just kidding. Awesome. Well, can you talk a little bit about, so we've talked about how to prepare, for the borrowing process. Can you talk about some of the options that are available to folks? I know that we mentioned the 30-year fixed at the beginning of the webinar, but what are some of the other options?
Yeah, that's a great question, especially in this volatile market. There we have different options available for different people for different reasons, right? So if you are young and you're expecting your income to increase, and if you're putting less than 20% down, you might want to look at some of these adjustable rate options. They are a little bit they have a lower interest rate. They are a little bit riskier. However, if you're putting less than 20% down, you're going to have mortgage insurance, and you're going to want to refinance that mortgage insurance off within 2-3 years, maybe 5 years, kind of depending on where things are in the market in terms of interest rates. So it is an option to look at. Like I said, everybody's situation is unique, so we want to kind of customize this experience for you. But if you're on a fixed income and you want to make sure that your payment is going to stay the same for the next 20-30 years, then the 30-year fixed is really a good option for you. If you think maybe you're going to get an inheritance, and maybe you want to, there's just different options. There's different reasons why people get different products, and we have all of those available.
That's great. So one product is not necessarily better than the other.
One product is not necessarily better than the other. I will say, I've been in this industry for a long time, and I've never met one person who has stayed in a 30-year loan for 30 years, not one. So the likeliness of you refinancing that loan is very, very high, whether it's to take out some cash to do some home improvements, or do some debt consolidation, or pay for college, or buy another house. It's endless. You're really not going to stay in that same loan for 30 years. So having all of these options and knowing what's available is really important.
Yeah. Great. All right. Well, I'm sure we'll talk about this a little bit later as well, when we're speaking with Aaron about the buying process. But can you tell us from the lender's perspective what the pre-approval process is and why it's so important?
Absolutely. So it's really important to get pre-approved. It's an important part of the buying process. You want to come prepared to your realtor. You want to say, hey, I've been pre-approved for this loan amount. So they know what to shop for you. They know what to do. They know what kind of property you're looking for. They know what your price range is. There's no surprises. It's really step one. You really want to have an understanding of your finances and know what is going to work for you. Once you have talked to me or your local lender, it's really important that you're going to submit an online application and submit all of these documents that we've been talking about, whether it's your W-2s or your tax returns or, your proof of income, right? And then we're going to pull your credit. So we're going to take a look at all of your credit history, and we're also going to review all of your assets. So again, those are the 3 components that we look for in the pre-approval process. Then we'll issue you a pre-approval. Generally, it's going to be what the maximum purchase price is, or whatever is going to be the comfortable purchase price for you. And then it's good for it's good for 90 days. So you have 90 days to go shop for your perfect home. And then if you don't find it, don't feel like, everybody else finds it within 90 days. It's not the case. Go ahead and get it. We can just redo your pre-approval and repull credit and pull some updated documents and get you a new one. So
Great. Well, I do have two questions that have come in from attendees. So the first question is kind of going back to our previous slide. So I'll just go back for a second. Sorry. So the question is, can you talk a little bit about what an adjustable or an ARM is, adjustable rate mortgage?
Absolutely. So we have 3, 5, 10, 7, and 10 one arm. So that first number represents how long the loan will be fixed for. So it's either going to be, it's a 30-year loan, but it's only fixed for either 3, 5, 7, or 10 years. I personally like the 7 or 10-year one, which means that it's fixed for either 7 or 10 years, and then it adjusts on an annual basis. I like these loans because generally speaking, people are refinancing within 5 to 7 years, but the 10 years gives you a little extra cushion. That's why those are my favorites. And they tend to, in general, be lower than the 30-year fixed. Right now, things are a little bit volatile. So, but I like those loans the best just because it gives a little bit of flexibility. So depending on what you're going to do with the property, right? If this is your forever home, the 10 or the 7 might be a good option if you're only putting 5 or 10% down, because you're going to want to refinance that mortgage insurance off within that fixed period. It's also predicted that rates should be coming down towards the end of the year, let's hope. So, it gives you a little bit of flexibility in terms of refinancing when rates come down, but also taking advantage of what lower rates are available now.
Great. And then going back to the slide we were on, we have kind of a two-part question. So do you need to get pre-approvals from your lender for a condo or a home, and also a separate pre-approval for a TIC, or tenancy in common? Tenancy in common? Am I saying that right?
Tenants in common.
Tenants in common. If you don't know what you will have the opportunity to bid on. I understand only a couple banks do TICs. In other words, do you need 2 pre-approvals from 2 lenders?
Yes. So in this instance, you would need to have 2 different pre-approvals. We do not do TICs here at the credit union. So we will be able to assist you with a condo or a single family home or a townhouse, but not a TIC. So that would be a separate pre-approval. That's a good question.
Yeah, thanks for asking that question. All right. So, going into the pre-approval process, you're looking at their financial picture, you're getting things organized. What are some things that you should not do when you've gotten pre-approved, or when you're, in the process of getting pre-approved?
In a blanket statement, don't do anything that's going to change your financial picture from what we've discussed. There are some individuals that can kind of do things without it really changing a lot, but there are some that, if you co-sign for a brother or sister or parent or something like that, that is going to drastically change your financial picture, because even though it's not your loan, it's still going to come up on your credit. So co-signing or making any kind of large purchases, those types of things do change your financial picture. So let's have a conversation before you do any of those types of things. Changing jobs could be an issue, especially if you're changing careers. And if you're going from a W-2 employee to self-employed, that changes everything, right? Because as we talked about earlier, we need 2 years tax returns for self-employed people. So if you do change, that could possibly change your financial picture. So buying anything, large purchases, or obtaining new credit, or co-signing, any of these things could potentially change your financial picture. So we want to be careful of that.
Yeah. All right.
Oh,
Oh, I think that, yeah, so that was
the things that we do want to do, right, is make sure you're making your payments on time. Because
Yes.
as we said, that's 35% of your credit score. So make
Yeah.
those payments on time.
Yeah, I feel like we're collecting some taglines from this webinar
Right.
today that we should turn into t-shirts or something. And that is one of them. All right. So before we jump into our next this next section of the webinar, we have another survey question for everyone, and this one is kind of the topic of the webinar. Do you think it's a good time to buy? So let me go ahead and launch this for you guys. Oh, one moment. Oops. Sorry, one moment. Oh, here we go. Okay. Let me reshare. Okay. So here's the second question. Do you think it's a good time to buy? So go ahead and input yes, no, or maybe. All right. Okay, great. Thanks for sharing your answers. So let's go ahead and share the results. It is a mixed bag. So we're about 50-50 with yes and no and a couple maybes. So all right, well, let's get into this. So today we have a guest realtor with us from eXp Realty. We have Erin Baluyot. So I'll go ahead and let you introduce yourself, Erin.
Hi, everyone. My name is Aaron. I'm that unicorn that was raised in San Francisco. I went to Cal, Berkeley for school, and I've lived out in Oakland ever since. So I've been out in Oakland for the past 20 years. To go back to the survey question, I'm not surprised that it pretty much broke evenly with 50-50 in terms of the response. That's the number one question that I constantly get from many who are either thinking about buying or may have, been house hunting in the past and have stopped house hunting altogether. I think many folks who were either in the market previously or currently in the market have been waiting for the shoe to drop to see whether prices would go down. And the home values, as you will see shortly, are as dynamic as the interest rates are. So typically the sort of the answer that I like to give to potential buyers, it's going to depend on your interests and what is the reason for your purchase. What is your motivation? Typically, the general rule of thumb is if you can own that home, if you could live in that home or maintain that home for the next 5 or 7 years, more than likely you will be able to see some appreciation. The first 5 years, most of your mortgage payments, as I'm sure Rashida will also confirm, is that most of your payments are going to go towards your interest payments. So after those 5 years, after most of your interest payments have been paid, then you will be able to enjoy some appreciation from your home. And typically the real estate cycles are within 5 years. Now, the past 8 or 9 years has been an anomaly because we've seen basically a complete upward trajectory with the real estate market, with the exception of within the past year. Although more recently, we have seen the market start to pick up, and that's normal for the springtime, which we're seeing now.
Yeah. So let's go into, since we're on that topic, let's go ahead and dive into some of the local marketing or local market trends.
Yeah, absolutely. So as you see here, this is within the past 30 days. Now, this is just for Oakland, but you can pretty much take the snapshot for any of the Bay Area cities, and you will see something very similar. So you see the number of active listings, average days on the market for sold homes, 62 out of the 177. The monthly change, what we've seen, is a depreciation of 10.1%. And that's basically 69 days on the market as opposed to being 62 days. So the annual change that we've seen is 40.9%. So not necessarily a downward trend in that, but we do see a downward trend within the month. So I think a lot of this explains sort of what we're seeing in the market. We're starting to see more people realizing that the property values are not necessarily going down. Now, if we go to the next slide, we'll see a slight change because this is for single family homes, but the next slide is actually for condominiums and townhomes, or what's also known as PUDs, planned unit developments.
Oh yeah, this is it. Is this the slide up?
Yeah.
Okay.
So as we see here with the number of active listings and the average days on market, 56 days. So we've seen that as a decline of 16.4%. So homes in the condo and townhome market are definitely staying on the market considerably longer, 67 days. Also, you see the median list price and the median sales price. Now, median list price from 14.5% change within the past month. Now, you have to keep in mind the list price is also quite dynamic. So what we've seen maybe 5 years ago was the trend in the real estate market was to underprice the home. Basically, it would be a teaser list price. So what that tends to do is encourages multiple offers. So then you're competing with other potential buyers. But because of the shift in the market, we're starting to see properties actually listed at what we call more transparent pricing, what the home will actually sell for. Now, very different from, say, the single family homes, we are continuing to see a downward trend with the condo and townhome market. Now, a lot of times I'll get the question of, why would anyone want to buy a condo or a townhome? It doesn't make sense because you have those HOA fees. I prefer to buy a single family home and have more space, have a backyard. Now, this is where it's really important to know what you're actually pre-approved for. And not only what you're pre-approved for, but what you're comfortable with in terms of a mortgage payment. So although you may like the idea of living in a single family home, when you look in the particular city that you're focusing on, that single family home may not be in a neighborhood that you can see yourself living in. So potentially, more than likely, you can see condos and townhomes that are usually in, quote, the more desirable neighborhoods. So those are some of the things that you'll have to consider.
That's really helpful. And also really interesting, just like the differences between the condos and the single family homes. But we've heard from Rashida, what the borrowing process looks like. Can you take us through the home buying process for someone who has never done this before?
Absolutely. Now, keep in mind, you're receiving a lot of information right now. You're receiving tons of information from Rashida. You're receiving tons of information from me. The analogy I like to use is that, if this is some of the first time that you've heard any of these phrases, if this is the first time you've been to a first-time home buyer workshop, the analogy I like to use is trying to take a sip out of a fire hydrant. You're going to get tons of information. You're probably going to retain maybe 10%, if that, from this. So it's going to be extremely important to reach out to Rashida, reach out to myself, to really have a one-on-one, in-person conversation. And this is what I typically call the initial consultation. So I'm going to want to understand your motivation of why you want to buy. We're going to take a look at the local markets. What are the trends in the local market? If you're looking in Oakland, if you're looking in San Francisco, if you're looking in the South Bay. We're going to discuss some of the lending qualifications. Basically, have you been pre-approved? That's highly, highly important. I'll be more than happy to meet with you and even meet with you at a home. But unless you actually know what you're pre-approved for or what you're comfortable with in a mortgage payment, your search is going to be extremely broad, and we're going to need to narrow that. And having that pre-approval will more than likely determine where it is you can actually buy. And then we'll also define how we'll be able to work together. Do you prefer text over phone calls and emails? I, for one, prefer text. And also feel free to call me. But if you don't reach out to me and if you need to get hold of me immediately, the best thing to reach me is by text. A lot of times I get inundated with email. I may not see your email until the very following day, but offers can potentially be due the very next day. Or sometimes there isn't an offer date and you need to submit an offer as soon as possible. So we need to meet or we need to talk virtually and put an offer together.
That's great. And that's great that you are available via text, because I imagine some home buyers, like to have that, that ease of conversation, because this is a huge purchase. So it's nice to know that you're that available.
Absolutely. And I'm glad you brought that up, Tatiana, because this is more than likely going to be your largest investment, your largest purchase you've made up to this point. But you have to keep in mind, your first home will more than likely not be your forever home. The days of, say, our parents' generation, where maybe their first home was their forever home, that's no longer the case. We see buyers transitioning, buying and selling, either upgrading, maybe you're adding to your family, so maybe you need additional rooms, maybe you're downsizing, maybe if you have a child and they're going off to college, you don't want them to come back and live in the home that they grew up in. So maybe you need to downsize to a condo. So it constantly changes.
I like that defensive strategy there.
Absolutely.
So
yeah, so once you get your pre-approval, and really I won't need your pre-approval letter, but you will more than likely get a pre-approval letter from Rashida. I will only need that pre-approval letter once you're ready to write an offer, once you're ready to submit an offer. And that pre-approval letter, I'll reach out to Rashida and I'll ask her, let's just hypothetically say you're pre-approved for $700,000. But the offer you want to submit is $650,000. While it's great that you've been approved for $700,000, if we're only submitting an offer for $650,000, then I'm going to ask for a pre-approval letter from Rashida that only has what we're submitting an offer for, which is $650,000, because we don't want to show our hand to the potential seller and the listing agent that you could actually submit an offer greater than what you've offered in that $650,000 amount. Determining your budget and price range, those are some of the things you'll go over with Rashida. Prepare your proof of funds. Make sure if you need to liquidate any assets that you're going to be able to liquidate those assets within, let's say, 30 days. Typical escrow is 30 days. If you're receiving any gift funds, make sure, again, you talk to Rashida about what is the best strategy to make sure that you have those gift funds available to you once you're ready to submit an offer. And many times with many buyers, they come to me that during the first initial consultation, they may give me their maximum purchase price. But if we have submitted multiple offers and have been beaten out, outbidded by other buyers, it's not rare that number actually increases, because then you may be hitting up your parents, your family members for additional gift funds because you see a home that you want that badly. So it's not that uncommon to change your purchase price from our initial consultation till the point we actually get you in a contract.
Gotcha. Well, since we're on the topic of financing, we do have two questions that came in. And I just want to say to any of the other attendees, if you have any questions, feel free to submit them using the Q&A button or tool. So the first question that we have here is, would getting married be a benefit? So it sounds like, for the borrowing or for the pre-approval or for, the loan, is it a benefit to be married?
Well, more than likely, when you're getting married, it really is going to depend on. And again, this is something you'll go over with Rashida when you're getting pre-approved. But depending on both of your credit history and credit report. Now, if both of you have stellar credit, and you are combining your income to purchase a home, then that's definitely beneficial. But let's say, one of the two may not have such a great credit history, and that could potentially affect your purchasing power. So you may not want to put your significant other on that pre-approval. So it really is going to depend.
Okay, great. And actually, the second question I'm going to save for the end for Rashida.
Okay.
All right. So let's talk a little bit about shopping for a home. I know these days we have a lot of access to Zillow and Redfin and things, but can you tell us a little bit about, once someone is working with you, what will that look like?
Absolutely. So one of the first things I like to do is set up an automatic email update. This basically means within your search parameters, given a price range, let's say $600,000 to $800,000, and let's say the East Bay cities of Oakland, San Leandro, and Richmond, I can create an automatic email update that will send you the active listings and any new listings that come on the market. And you will receive those new listings as they come on the MLS. As soon as an agent puts that listing in the MLS, you'll receive it as soon as it's is inputted. Once I have a better sense, and this means we probably have gone on tour a couple of days, we've looked at a couple of properties, I have a better sense of what your needs are and what it is you're looking for. Is a garage important to you? Is a large backyard important to you? Is having a second bath, whether it's just a powder room, a half bath, or a second full bath, is that a deal breaker for you? Once I have a better sense of all of those sort of search parameters that you have, then I can more than likely go on tour. Typically, if let's use Oakland, for example, there are 2 tour dates in Oakland, Mondays and Thursdays, and I could take a look at some of these properties prior to you viewing them. Now, this is a collaborative effort because many times the very first showing might be a Sunday open house. So I could, of course, send you to a Sunday open house as well. If you'd like to meet me there, I'd be more than happy to meet you at the open house. But you can also take a look at properties on your own. If there's a property of interest, then you can reach out to me and we could also schedule a private showing. Because many times when you go to an open house, you can't talk confidentially about, sort of pricing, because there are lots of other people that might be around that could also be submitting an offer. So you want to keep a lot of that very private and confidential without having other potential buyers listening to what you might offer on the property and also the listing agent.
This might be a weird analogy, but I watch Storage Wars a lot. So it kind of sounds like that, where they're looking at the merchandise and then they're being very quiet about what they're gonna bid.
Right. Absolutely. Yeah. Yeah. Very much the same. You want to keep as much of that information to yourself, and
Poker
or,
face.
of course, with me.
Yes. All right. So the next section is on making an offer, and we do have a couple questions on this, but let's talk through some of the things to consider before a home buyer is making an offer, and kind of how you help with that process.
Absolutely. So you've identified a property that you absolutely love and you want to submit an offer. One of the first things we'll do is we'll review what we call comps, comparable sales in that particular neighborhood. And typically those are sales within the past 6 months. But since the market has been extremely dynamic, hopefully we'll be able to find some comps within the past 3 months and be able to narrow that down. Most of the homes, at least here in the Bay Area, have very thorough disclosure packages. This is very different than Southern California. Typically, you get a disclosure packet after you submit an offer in other parts of the states and definitely in Southern Cal. But here you get your disclosure packet up front. And that's a great thing because typically, or we hope there's a general home inspection report in there, a pest inspection report, and let's say a roof report. Now in Oakland in particular, there are also 2 local ordinances that you'll need to be aware of, whether those ordinances have been completed by the seller. So there's a sewer lateral ordinance. That's basically your sewer line from the home out to the main in the street. In contract, somebody has to determine whether the seller has repaired that or whether they're passing that on to the buyer. And if they're passing that on to the buyer, there's more than likely going to be a bid for that sewer lateral. And that sewer lateral can range anywhere from $5,000 to $15,000. So that's a big expense that you need to be aware of. There's also a sidewalk ordinance, and that's particularly in Oakland. And so typically that's from the American Disabilities Act. If there's any unevenness on the sidewalk, and this is a question I always get, I thought the city was responsible for the sidewalk. No, you actually, the homeowner, are responsible for the sidewalk in front of your house. So you want to make sure that if there is a bid for that, that you're comfortable with taking on another expense. So it begins to add up. So we'll take a look at the disclosure packet. We'll take a look at negotiating the best potential price. Now, having been in the business for over 20 years now, I know lots of the other realtors in the business, and that's going to be really helpful because I could call more than likely that listing agent and extract as much information in terms of what we need to do to write a winning offer, if you're willing to be as competitive as possible. And basically that's going to be your maximum in terms of what your pre-approval is. Then there are also, now there are many contingencies, but I'll go over the 3 primary contingencies. Basically, this allows you to back out of the offer. If the inspection contingency, if there are any reports that we discover and we try to negotiate on any potential repairs that were not disclosed and we're not able to come to an agreement, then you can back out. Financing and appraisal, many times you're going to talk to Rashida about that, but I will also communicate and talk to Rashida as we're submitting the offer or prior to submitting the offer, whether we need a loan contingency, whether we need an appraisal contingency. Appraisal contingency is when the appraiser goes out and determines that you're buying that property at fair market value. That fair market value is basically what the purchase price is. Financing is when that loan has gone to the underwriter and they have given their approval for the property, then we can remove the loan or financing contingency.
Right. Yeah, that was a wealth of information. I hope folks are taking notes. I'm just kidding.
A ton of information you said. So yeah, you're not going to grasp all of this in this one sit-in.
Yeah, but we do have a couple questions related to this slide. So so let's see. So we have actually it's a 2-part question from the same attendee. In regards to offers and being outbid, love letters. Some on-site agents at open houses seem welcoming, and a couple have said that they're no longer allowed. Is it worth asking one's realtor if one wants to present their reasons in hopes that it gives them the advantage over the competition, since we're up against wealth and investors? So, are people still submitting letters, or is it worth it for your agent to talk a little bit about you?
Yeah, so this is actually fairly recent. A year, 2 years ago and beyond, I highly encourage love letters. But now they're actually discouraged because the love letters themselves can be a terms for discriminating against a potential buyer. So we are completely discouraging love letters altogether. Now, if you happen to meet the seller, let's say at an open house or while we're touring the property, that's a great time to introduce yourself and ask any questions. And of course, you want to be pleasant and polite as well, because they'll remember you when we do submit that offer.
That's great. All right, and I know we're running close to time, so we'll try to get in the rest of the. We have a couple more questions as well for Rashida, but let's go ahead and your offer is accepted. You're in contract. What happens after your offer is accepted?
Yeah, typically, so the buyers choose the title and escrow company here in Northern California. Escrow and title are with this one and the same. That's basically a third neutral party where all of the funds are being handled. And also that's where the title search to make sure that the seller is the rightful owner that's selling the property, and also making sure that there are no clouds on the property, no liens, a mechanics lien, for example, or a garbage lien. Your good faith deposit or initial deposit needs to be deposited typically within 3 days of acceptance of your offer. And then I would send out the contract and also contacts of all the parties to both the escrow company, but then also to Rashida.
Got it. All right. And then you talked a little bit about, disclosures and inspections earlier, but can you talk a little bit about like the final inspections and such?
Yeah, absolutely. So typically the week of closing or the week prior to closing, we're going to do a final walkthrough. And typically this is not a way to back out. But more importantly is to make sure that the home is still standing, it hasn't burned down. And in the process of the seller moving, they haven't destroyed anything. They haven't, gouged the walls. They haven't scratched up the hardwood floors. And also, if there was anything that was supposedly included in the sale of the property, making sure those items still exist. Now, if any of those, if there's any discrepancy, then we can withhold funds of closing to make sure we resolve any of those issues.
That's great. All right. And then removal of contingencies. So I know you talked about 3 different contingencies earlier. So it sounds like they're being resolved. Is that correct?
That's correct. So let's say we had a 7-day inspection contingency. We've done our due diligence on all of our inspections. We feel comfortable with our inspections and we want to move forward with the purchase. We have to remove all the contingencies, by the way, in writing. Everything is written. We've spoken to Rashida and she has given us the green light to remove the appraisal and also financing contingency. So we're ready to remove those as well.
Wonderful. All right. And then I think this is the fun part, closing. Can you tell us what happens at the very end? I know obviously you get the keys, but what else?
Yeah, so we've already talked about the final walkthrough, but now we're waiting for the loan docs to arrive at title. So then that's when you are signing the loan documents, either at the title office or with a mobile notary that comes to your home or to your office. Then we're waiting for basically the lender to send the funds, the balance of the funds to title. Basically, this is going to be your loan. And of course, if you have a portion of that to close, this is when your funds also need to go to title. So typically, after you sign your loan documents, 24 to 48 hours of that is when the lender funds their loan to title. And then typically 24 hours of that is when the deed is recorded at the county recorder's office. And that's when your name is on title and you are now officially the homeowner, and yay, you receive the keys to your new home.
Yay, awesome. Well, great. Well, I know we only have a couple minutes left, and we do have some questions in chat actually. So the ones that we have are very lending focused. So I think these are appropriate for Rashida and Jeff, perhaps. So the first one is, what type of advice do you have for those who already own a home in or out of state? What kind of loan would we qualify for? What if we are looking for an investment property? So it sounds like the question is around if we're looking for an investment property, in or outside of California.
Okay, that's great. So we only do loans in California here at the credit union, but one of the advantages of buying an investment property is we can use 75% of the potential rent to offset the payment. So what I mean by that is, 75% of the rental income minus the expenses for the property we can use as income. Basically, we can supplement your income with the rental that you will be receiving from the investment. And I'm pretty sure that's nationwide, but I'm just gonna stick to California because that's my expertise. So let's have a conversation. Let's see what's going to work for you. Our minimum down payment for an investment property is 15%. But we do again have various products that might, we can see what's going to be the best product for you and see what'll work.
That's great. And I just quickly want to mention, I know that I advanced to this slide, but I forgot to mention, we have three helpful resources on the call today. So Erin, from the realtor side, Rashida and Jeff from the lender side. But we also have some resources on our website that you can check out, some calculators if you're not ready to talk to somebody and you want to crunch some numbers on your own. Some like assistance programs, resources, and articles. We have tons of articles on the website. And then of course you could reach out to the speakers. So, Rashida and Erin are here to help you, as is Jeff. And so we'll be sending an email out after the webinar, probably tomorrow, with their contact information. So feel free to reach out. And I feel like we learned a lot today. We learned to marry the house, not the rate of the loan. We learned that, paying your credit cards, regularly is important. We learned that Erin has a lot of resources in the Bay Area that can help you buy a home. So thank you everyone for attending today. And we actually just got one more question, if I can ask that for the person. So the question is, how soon and how frequently can you refinance since interest rates are so high now? And if the entire monthly payment goes to interest for the first 5 years, that means that if you refinance 2 times in 10 years, you're just paying interest, correct?
So the entire amount isn't going towards interest, but the majority of the payment. So when you're looking at an amortization schedule, you'll see your payment will be the same, but the proportion of what's going to interest versus what's going to principal will change as you pay that loan down. So you can refinance, there really isn't a rule on how often you can refinance. We're just going to have to sit and do the numbers to see what makes sense to you, because it does cost, right? There is a cost to doing refinancing. So you don't want to keep refinancing unless we see something like we've seen in the last couple of years where rates just drop and they keep dropping. And, you're like, well, I'm saving a point each time I'm refinancing, then it's going to make sense. But, there is a cost to it. So let's sit down and do some numbers. And, sometimes, kind of depending on where you are in the loan, it might not make sense. Sometimes it makes sense. So again, each situation is unique. But there isn't a specific rule on how quickly you can refinance right away. There's really not a rule.
Yeah, that's great. Well, thank you for answering that last minute question. And thank you to all the attendees for all of the great questions today. We got a lot of really great ones.
Yeah.
And so thank you again, Erin, for spending this time with us. Thank you, Rashida, and thank you, Jeff. And we hope everyone has a good evening. So thanks, everybody.
Thank you.
Thanks, everyone.